Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Some interesting stuff going on, even though the market is almost exactly where it was a month ago.
Well, people are so panicked, I think, about the state of gold. It had that quite sudden plunge. Is it going to recover? Is it going to go down lower? People are debating right now.
Well, first of all, gold, of course, had a brutal bear market from 2011 till last year, especially the mining stocks, which fell about 90%. So that experience is still in the back of everyone's mind, I think, subconsciously, whenever there is a gold pullback. But this year, I do think we've started a new bull market. We came out of the 200 and 150-day moving averages after a period of basing in the first quarter of this year. And the mining stocks, they went up more than 100%. But in July, gold itself peaked out around 1380, and we've been pulling back ever since then. Now, what tends to happen in a gold pullback is the stocks actually tend to fall harder first, a greater percentage rate, because the mining stocks tend to lead the action in gold. So when they perform better than gold, that's real positive. When they perform worse, that's a sign that you're starting a correction. Now, what's interesting at this point, though, is over the past week, since last week there was a sharp drop where gold fell below 1,300, down towards 1,250. But since then, over the past couple of days, the mining stocks are performing better than the price of gold is doing. So I take that as a positive sign that we're really probably near the end, if we haven't already made the end, of the low when it comes to the mining stocks. Gold, who knows, it could fall another 20, 30 points. It's hard to tell. But even if it did, it's not much downside from here. And essentially what we've seen is a pullback down to the 200-day moving average in the first year of a bull market. And when that happens, that's time to buy. So that's what I think people should do. You know, that doesn't mean put all of your money in gold or all your money in mining stocks, but I feel comfortable myself having, you know, a good portion of my money in there. I've got 20% positions in mining stocks in most of my accounts, and I'm pretty happy to do that. You know, if you just buy a position that's a manageable size, then when it goes up, you can still make a really good return. But then if, say, it's not yet the bottom, and they fall another 10%, it's really no big deal. You know, if you're 100% invested in something that falls 10%, it does get scary. But if you're like got 30% of your money in there, if that's a 3% loss, it's no big deal, and you can ride it out and so forth. So that's what I think people should look at. Look to buy. Look to you know, be happy and just hold what they got. Now that said, even if this is the price bottom, I don't really think they're just going to go straight up to the highs or something. Typically, you can get a period of sideways action for several months after a pullback has happened in the mining stocks, and that's what it looks like it's going to happen to me. We could go sideways here, you know, bounce back up, take back half the losses, and come back down and so forth. We could do that in the end of the year, then take off again next year. But regardless, it still makes this a good time to buy in order to, have positions that are going up when this stuff makes new highs. Again, it can really take off. And in the end, when it comes to investing in the financial markets, the way to make money is to buy on dips, and not to just buy something after it's gone up already for a very long time. In fact, I just saw an interesting study this week that said if you would have bought over the past 20 years, if you would have bought the stock market after it's gone up for a week and tried to hold it another week, you actually would have made almost nothing, because those tend to be the worst times to buy. So if you would have done the opposite and bought after it's dropped for a week straight, you end up doing better. So the trick is, in order to do that, you've got to be willing to take money off the table when there's big rallies. The only way you can have money to buy when after things drop. And that's, not advice you hear typically people give. People love to buy and chase rallies, but if we forget about gold for a second and think about the stock market, we've had a tremendous rally in the market since February. Now we haven't gone any higher in the Dow and the S&P 500 really since August, just going sideways. And the valuations for the market are very high from a historical standpoint. I think it's a good time for people to take some money off the table when it comes to the stock market, because we've already had the big rally. I see some people that are bullish on the market say, well, the Dow can go to 19,000 or maybe 20,000 and so forth, but we're sitting here right above 18,000. That's not much of a return. And the big Wall Street brokers that you see on CNBC, they say the S&P could go to 2,200 or 2,300, but that's not a big return from here if it were to happen. And you're basically risking 15 or 20% off the high. And even in the most bullish markets, you get 15% corrections, at least 10%. So we could, if we just say 10% on the next pullback, and it could be worse than that, but if we just say, it could be 10%, what's going on are people are fully invested in the market, risking 10% to try to make 5% or 10%. They're just like flipping a coin at this point, and they should, I think, take some money off the table, raise some cash reserves, shifts. If someone's fully invested in the stock market in the United States and they have no money in gold, my gosh, they need to sell and then put 10% of their money in gold or in mining stocks, because they can move up when the market goes down, especially if there's a correction. And over the past couple of years, the market drops, and there always seems to be talk like, well, we can't raise rates now. Maybe we'll print money, and that makes gold go up. So gold can be a good defensive play, even if it just goes up because it's in a bull market, regardless. So I think gold is really a necessary thing for most people to own at this point.
Well, also, too, with tough times in gold mining over the last 4 or 5 years, they used to say there's no way they could make money at anything less than $1,100 an ounce. Now I believe they've got it down to $800 an ounce, and that's not likely to happen, is it?
Yeah, that's exactly right. And one reason that's happened is because the oil prices have dropped so much, too. Oil's been in a bear market since 2014. It does have bounces, but we haven't seen a bull market in oil and yet, even though we could get predictions for one. And frankly, I don't think we're going to see one for maybe another year. The reason why I think that is because there's a cycle in commodities where gold and silver tend to start bull markets first, then agriculture commodities go into one, then oil goes last. And the agriculture and soft commodities, they're basing out still. They did have a rally in the middle of this year. It looked like they were about to break out, but it failed. So until there's a real big rally there, I can't really see oil going into a bull market. So 60 cents, that doesn't mean it's going to crash or something. I really don't know. So, but that's good for the mining companies, because as long as oil is $50 a barrel, it doesn't really matter. That keeps their costs low.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, OPEC and Russia are hinting that they're going to freeze their production at current levels. But what kind of a freeze is it when their production is at a record high?
Well, that's a good question. And a few weeks ago, there was a news story that OPEC wants to cut production, and oil spiked on that news, and there was a lot of excitement that day. However, the reality of the story was that they're just going to get a committee together to come to an agreement on what to do at the next OPEC meeting, which is after Thanksgiving. So there's not a real definitive plan to cut the production. And interestingly enough, I looked at the oil futures market, which you can get reports that tell you what small oil speculators are doing and what the giant commercial operators are doing, which includes Saudi Arabia and big production companies. And in the oil futures market, they are shorting oil since that announcement came out a few weeks ago. So that tells me that they're not betting on a dramatic price rise. It could be more that they're just trying to stabilize the prices. That actually seems to be what they're hoping by, creating news stories like that and freezing things to stabilize it and stop it from falling more, which that's fine, but it's no real evidence that oil is on the verge of a giant bull market. The commercial activities tell me that. With gold, earlier this year, the gold commercial traders had the lowest net short position that they've had in decades. And that's what creates major bottoms in the start of new bull markets, and we don't see that in the oil market. Actually, in some of the soft commodities and agriculture commodities, there are very low commercial short positions. So there are positive indications that things will eventually turn there, but I'm not sure when. I thought they were turning earlier this year. We just got a little rally that fizzled out, but it will happen eventually.
Speaking of taking your cash out of the market, Warren Buffett sitting on a bag, I guess maybe several bags full of $75 billion in cash. Why has he gone to cash?
Yeah, that's a fascinating story that hit the news wires this week. Now, with Warren Buffett, his companies generate about $1.5 billion in profits every month, every single month. He's not a regular, guy of a stock brokerage account or an investor like me or you. He's basically a giant conglomerate that happens to own lots of businesses outright. And yes, he does buy big positions in stocks, but he's not, he acts like and talks like he's just this simple person and, just this guy that buys stocks and they go up, and he holds them and they just go up. But that's not the reality. That's the portrayal on CNBC and United States media. The reality is he built his fortune really in the early 1970s by going completely to cash before the big bear market in 1974 and buying as it bottomed out. And that's where the bulk of the big thing he did to become this giant billionaire. So today, what's interesting is that he did buy a company out in January, but since then he's just sitting there and letting the cash accumulate and accumulate and accumulate, and he's not buying stocks, he's not buying other companies out, and that tells me he's being very patient, letting the cash reserves pile up, and has gotten up to $75 billion, which for him is actually a record cash position. So the funny thing about him is if you watch CNBC and see him do interviews, he's almost always bullish on the stock market and says, you know, it's just going to go up. It goes up forever. It goes up over the years and so forth. But if you look at what he's actually doing, he's not buying stocks right now. He's building a position so he can potentially buy at lower prices. And that's, I think, the mentality that we need to have, or listeners need to have, in order to succeed in the markets going forward. I know, you know, everyone wants to gamble. They want to buy something. They want to do something. If you turn on the computer and look at the market move, it makes you want to do something. But the reality is this is not, I don't think, the time to do much except for buy gold, buy mining stocks with a portion of your money. But to be fully invested is not the thing to do now. Have cash reserves. Be like Warren Buffett. Be as not the Warren Buffett on TV, but the Warren Buffett of what he's really doing, and be in a position to buy later at cheaper prices. That's, I think, the most important thing for people to do right now.
Do you also think people are obsessed with their own local stock markets? Americans looking at just the Dow Jones kind of thing. In Canada, we look at the Toronto Exchange. London, I bet you they just bet on the London Exchange. Should we have not a more global prospectus?
Oh, absolutely, absolutely. In fact, if you look at this year, the stock market that's actually done the best is the Russian stock market. In fact, I saw an interview with Jim Rogers, and he's someone who does exactly what you're talking about. He invests all over the world, and he was saying that he was having nice gains in his with his money this year, and it's almost all solely due to having a position in the Russian stock market. And that's one thing. If you've got a position in something that goes up really well, a small position in it can make a big return. And I can speak for myself that I'm beating the market so far this year in my accounts, and the way I'm really doing it is just by having a position in gold in the mining stocks. Just having a portion of my money in that is enabling me to beat the stock market as they've gone up so much from where they were in January. And that's the big trick, is to diversify out of just being in one market and try to get into other markets that are in position to really do well. It sounds hard, but it's not necessarily if you're patient and you look at different things and you're willing to have an open mind. Now, this exact moment as we're speaking, though, I don't really know, what's the best thing to buy. I don't see much other than the gold at this second. That's really in a great buy position. But if the stock market pulls back at some point in the next 6 months, you can look and see what other markets around the world are not dropping as much as the U.S. stock market. What's holding up or performing better? Because if there is a correction or a drop, those markets then become great buys. After you do get a big correction, what tends to happen is the stuff that doesn't fall much or in comparison tends to perform the best afterwards. So that's basically how you take advantage of a drop. Look at what sectors are doing the best relative to the U.S. market averages, and look at the rest of the world, see what stock markets are holding up and in a good position. I mean, I'm looking at the Russian stock market. I'm even looking at the Greek stock market, if it can hold up. But I'm also looking at Vietnam. We spend a lot of attention on China. China's the world's largest economy now. and their stock market goes all over the place. But Vietnam is an interesting situation. They have a better debt situation, and they're an emerging economy. I don't have a position or investments in it, but it's something I'm watching very closely.
Mike, thank you so much for chatting with us.
Thank you. It's great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.